Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending June 21st, 2019. Before I get into the video, I just want to kind of give a heads up to both members, YouTubers, all that. I'll be around on Monday, and then leaving for vacation. I'll be out of the country for 8 days. So that's, what is that? I think it's June 25th through July 3rd. So just kind of an FYI, usually I do working vacations, and as much as I have access to a computer, which won't be a lot from what I understand down there, or at least Wi-Fi, internet access, I'll post some updates. So I'll certainly make a point to post a couple things during the week. But again, don't expect daily market updates and or a lot of intraday posts on the site for members. All right, let's just wrap up. This will be quick. Today was mostly a flat day. Not going to take too much of it. Small caps got hit pretty good, but the major large cap indexes were teeter-tottering between green and red all day and closed, about flat but down still. And so it's a start. I like, but I don't love. Let me say it again. I like, but don't love today's candles. And what I'm referring to is we had potential topping sticks, a hammer on QQQ, some dojis and everything else on a lot of the other indexes. So we do have a red candle, and we did close down below yesterday's, lows. We didn't take out the candles, but that's a start. So again, decent follow through so far. Potential that these could be topping candles, but work to be done. Namely, want to get back below yesterday's the lows on yesterday's candles. So we'll point that out, and you can see a little doji there as well in QQQ. Let's look at all the indexes real quick. Here's SPY. That's nice, decent follow through. And DIA, the Dow. Same thing. And a lot of you're seeing a lot of these consecutive doji sticks so far. Potential topping sticks. Mid caps, same story there. A little hammer candlestick with red follow through that closed down below yesterday's candle. So that's a potential top there. Potential on the mid caps, and there's the small caps. So small caps, like I said, got hit pretty hard. Let's look at the 60-minute chart. Somebody asked in the trading room earlier, hey, Randy, was it a news event, anything that took the small caps down? It was news, but it wasn't the kind of news you think of, not fundamental news. Let's pull that up for you real quick. Let me look down. I'm going across the monitor here. Okay, futures. So here's the 60-minute chart, that rising wedge that I've been highlighting on RTY, the small cap futures. So they broke down earlier today, in the beginning of the day, and that breakdown stopped. We came in and back tested. Why? It's a perfect example of what I say very often. If you have any one index break down and not the others, particularly the large cap indexes like QQQ or in SPY or the NASDAQ 100 and S&P 500, you're not going to go too far, mostly on, but you did, had a decent down day again, nearly 1% on the futures down here. And we back tested and rolled back down. We also hit that support there. So you can see we have support about 1551, 1552, somewhere in there. And that's a breakdown that stuck all day. And the reason it didn't go much farther is we had these two, the market itself, the S&P 500, at the same point in time, the S&P 500 and the NASDAQ 100 were falling and hitting their support level as the small caps broke down. So that's why the small cap, that breakdown in the small caps, at least in the futures, didn't go too far, because these guys have to buckle. Until the large caps break, you're not going to see very impulsive selling in the market, or a lot of downside on IWM. Now anything is possible. I know sometimes IWM can go up or down more, but I'm talking generally speaking. So to put the odds in your favor, if you're an RTY trader, or IWM, you want to see these guys break down, and that will greatly increase the odds. So there it is. There's not a lot to update from yesterday. Since I did the video yesterday, we had a couple more tags of the uptrend line, but you can see we have nice, clean, bearish rising wedge patterns on the futures. That's ES right here, the S&P 500 futures, with negative divergence confirming the bearish nature. As I always say, you have an uptrend line, that's usually a place to buy pullbacks, go long on pullbacks to support. When do you stop doing that? Or at least me, when I see the divergences, when I see everything getting overbought, doesn't mean that we must break down. And until and unless we do break down, we don't have a sell signal. The trend is up. These divergence lines can extend. So to be continued next week. So far, all the fanfare, I'm sure I don't even turn the TV on unless it's FOMC announcement or anything. I tune out the media, but I'm sure they were cheering the new highs in the S&P 500, which, as you can see, that went nowhere. So far, it's just basically another test or a failed pop above those highs. But again, you can't say that that's bearish because we didn't go up higher. The market's holding up right now, and the near-term trend is bullish. And the first sign that it's not anymore will be, again, an impulsive break, 60-minute close, solid 60-minute close below these wedges, not just ES but NQ as well. And like I say, the redder the better. The bigger we close down. If we do close down next week, the better. Otherwise, there could be more upside to come, but that's obviously not the way I'm leaning now with these wedges. All right, that's the S&P 500. Here's NQ, the Nasdaq 100 futures. Same story. Here's your clean. Just and since I've been highlighting these wedges, the only thing that's happened, other than we've worked our way a little higher within there, is we have more reactions. What does that mean to me? It just helps to validate the trend line. Originally you have 2, 3 reactions, and you get 4 and multiple. We hugged it all day. It just helps to validate the trend line. Doesn't guarantee that if you break it, you're going to just go crashing down, but it does help to support it, because the more eyes will come in and see, at this point, what I'm seeing here, and the more eyes watching something, the more likely it is that you're going to have sell orders, longs getting out, shorts getting in, if it breaks down. So what we watch for next week, obviously breakdown first. A couple other things I want to see is I want to see this PPO get down below that 0 line. Usually when it's above the 0 line, the trend is bullish. When it's down below, like it was here, the trend is bearish, and you back test from above. So that I want to see cross down. I want to see the breakdown, and I want to see this 76.95 level get taken out, because that's support. We could break down. You want a bullish scenario would be to break down and then shoot back up, especially more than just a back test of the wedge. If we break down and back test, no big deal, as long as it's a successful back test, meaning we reverse. But if we regain those levels, that wouldn't be so great. But again, we'll have to take it from there. Sometimes you pop back in the wedge and go back down. Let's not get ahead of ourselves. Let's just see what happens next week. All right, so let's look at the 60-minute charts of QQQ and SPY, and we'll wrap it up. Go to QQQ. Before we do that, just for those that hadn't caught my analysis recently, QQQ, like most other indexes, still hasn't made a new high this week. SPY, like I said, very marginal new high, which is failed that breakout yesterday, coupled with the fact that we had the bearish potential topping sticks. That sets the stage with the negative divergence and everything else for that that scenario that I'm talking about. Big move down. So an end of this, in other words, the end of this counter trend bounce with the next leg down to come. So we'll see. Let's go to the 60-minute charts and wrap it up there. Here's SPY, broke down last minute. Futures, by the way, had a little leg down afterwards in the after-hour session. I'll probably get to that. Well, they're still holding above the trend lines, and we're going to close the day soon. And it's also triple witching today, meaning futures, options, a lot of things expiring today. So you get some last-minute positions squaring at the close and shortly after, as positions are being covered and closed out, I should say. So here's SPY, a breakdown just before the close, but from my experience, you don't really act on a breakdown of any chart pattern, at least I don't, that occurs just before the close. There's just a higher probability that'll be a failed signal. Doesn't mean it has to be, but just don't read too much into it. But I do want to mention that's where SPY closed. That last 60-minute candlestick was down below there. But again, as I showed you, ES and NQ, they're still above the trend lines, at least the way I had those drawn. So there's that was SPY. Here's QQQ. Very similar story. We'll zoom in on this wedge. Here's your uptrend line off the lows right there. And I pulled this down a little from yesterday. I might have had it right about there. Either way, you can put it right there, come in and capture these candles here, or you can pull it out wide. This is what I call the BOD, or benefit of the doubt trend line. What I mean by that, I have fewer candles when I do this, but if you zoom in tight, I'm catching the bottom of this candlestick right there, that shadow or tail, the skinny part, and then today's closing candle. And so, to be safe during a resilient uptrend like we're in, you use the BOD or benefit of the doubt trend line, or at least I do. Otherwise, this I think is a better fit. So like SPY, it broke down QQQ before the close, but again, nothing goes very far on Friday before the close. Why? Well, who wants to take a position in front of a weekend? You have 2 extra days of overnight risk that you normally don't have. So most traders, at least I don't, care to take breakouts that occur, within the last hour or even the last half of the day on a Friday, especially if they're not impulsive. That's the other thing. I always say that. When you were trading a chart pattern, bullish or bearish, you don't want to see prices limp through there and do nothing. You want to see an impulsive move down, high increased volume, impulsive candle, solid close down below. That just increases the odds it'll play out. So bottom line, to be continued next week. These wedges either play out soon, I think, because they're at the the sweet spot. Again, we can extend the divergence lines, but these are just clean, textbook looking rising wedge patterns, and they're at the point where if they're going to break down, they'll probably do it very soon. So that's still my preferred scenario. We're pushing the upper limits, like I mentioned, extending, modifying my trading plan a little bit, and it's not much. We have an official short trade on QQQ that as of yesterday was only down and should be today less than 4%. So that's, to me, for the downside that we're looking at here, I see a potential of possibly 25% or more downside in the market in the coming months from here. And at the very least, we have some shallower targets that are down, in the 10% range plus, maybe a little higher than that. So that's what I'm looking for next week. And if things go the other way, and we start to move higher, QQQ takes out the recent highs, we start burning through divergences. This PPO signal line down here, that white line, clearly gets above the 0 line, because remember, that's a nice trend indicator as well. These are the things I'll look for that start to really chip away and dampen the bearish case. But when that white line here on the PPO, the signal line, when it's above 0, you have a bullish trend. When it's below 0, you have a bearish trend. It's not a be-all, end-all, but it does a pretty darn good job of telling you what the primary trend is at the time, and or at least on this time frame here, not the longest term trend, but on this daily chart. And so those are things I'll be looking for next week, and that's why I think if the market's going to reverse, we're still at that upper limit, upper threshold of where really it should to kind of fit well with the fit into what I'm watching on the technicals and all that. And then finally, I said it'd be short. One thing I want to cover, and I did an extensive video recently using the monthly charts. Since I'm not going to be here on the last day of the month, or not going to be around, I'll try to post an update. I'm interested in seeing how the candles close this month. So right now we have this candle here, but that means nothing. Monthly candles, a lot can and will happen over the next week, or likely will happen. And so this is a big bearish engulfing candle. These are rare. You don't get these often. Bearish engulfing on the monthly, they usually are followed by, they usually mark a significant top. So we had the bearish engulfing, and what I want to see is, to keep that intact, I want to see this month's candle not get above there. So if we rally up next week into the end of the week, or the last trading day of the month, and we close above there, well, it's not the end of the world for the bearish case, because you can see the big wedge type pattern here that we're still in, and we can go higher. But it does knock out that potential reversal stick there, that bearish engulfing monthly stick. And again, the other thing then probably won't happen this month unless we had a heck of a slide. And with the G20 coming up next week, I think the G20 meeting starts on next Friday and goes into the weekend. Markets probably aren't going to do much before then. So, again, barring something crazy blowing up in the, whole Iran thing going on over there, something like that can jar the markets. There's always a possibility of a black swan out there. I wouldn't expect a lot, so therefore we'll probably, at best, close the month, down below that candle, and probably not take out this trend line, because again, this is a long-term trend line off the 2009 lows that QQQ is above right now. So that's one thing I just wanted to get it out there. SPY is already down below its trend line, so SPY is back testing, and the S&P 500 is more of the stock market. It's much more representative of the market than QQQ, which is mostly tech stocks anyway. So there it is, breakdown and a back test. So and this again largely factors into my thinking and my analysis on why the upside from here is most likely limited. So those are things I'll be watching for. How do we close the month on these candles? And if we start to power up and the S&P can clearly put the recent highs in the rearview mirror and start to rally, do we take out this trend line here? That both of these trend lines, but right now with this yellow trend line, and close above it, that would certainly chip away at the bearish case. Do we make a bullish crossover here on the PPO right there? What that would do, if we did make a bullish crossover here on the PPO in the next couple months, that in itself is usually a buy signal. Bullish PPO crossovers, there was one right there. We'd have to go down here. But what it would do would probably give us a rally for a few more months, maybe some point later in the year, and then simply extend these big divergences that have been building on the monthly charts. You can see there, same thing with the RSI. So like I said, it might change my very near-term outlook, and knock down the chance for a reversal here soon. Might give us a little more upside. Hard to gauge, 5-10%. I doubt that much, but it is certainly possible. And the point that I want to impress, and we'll leave it at this, it would not change my long-term outlook at all. These divergences are still very much intact, and based on where we are with both the economic cycle, 10 years into what many consider now the longest bull market ever in history, things like that, there's a mean reversion coming sooner or later. And if the charts didn't tell me that it was coming sooner, then hey, great, but that's what they appear to indicate right now. So first things first, let's see how these 60-minute wedges develop next week. And then if they break down, is it impulsive? Do we start moving lower? So we'll take it from there. So again, I'll be around on Monday, and we'll pick this up then. Have a great weekend. This has been Randy Finney with Right Side of the Chart.